everybody. Come on in. Hi, GM. Hi, good morning, says Mr. Patil. Good morning, Mr. Patil. How are you doing? How is everything? What's going on? Can you hear me properly? All good. Yes, can hear you. Oh, thank you so much. That's a quick confirmation. I'm just going live on LinkedIn and I message my folks on YouTube. And then we'll have the show that we deserve. The show that we deserve so much. Now we cannot take a break even for a single day because it's so good. It's so good. It sets everything up. Gives us a beautiful start in the morning. And, well begun is half done. So I am done. I'm ready to start. We'll just set everything up. Yes. Letting the comments flood in. Have messaged everybody on WhatsApp. Live on LinkedIn as well. So there we go. Yeah. We should begin. Bum 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 bum. Mr. Patil says, I have one suggestion. You can schedule 8 a.m. start so people can come watch on the page. Else now that page is not there, there's no page to wait. Even if you come late, people will have the waiting page. I understand. Like a pre-scheduled thing. I get it. Even if, yeah, makes sense. The thing is, it takes time for the page sync to happen. So let's say if I've synchronized a page and then when I log into that page, it's not an instant process. It also takes time. So it's just added effort. So what I do now is just I set up my system. It takes 3 minutes, right? 8:03 I'm here. By 8:04 I'm just setting up the camera, and 8:05 I'm live. So I get it, but I'll take the feedback and I'll try to work on it. And I'll try to be on 8 itself. That would be even better, right? So let's begin the show that we deserve. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things could get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis, right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a copper, mug, a glass, a tank, a chalice, a stein, a canteen, jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Let's do it again. Beautiful, sublime, healing. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together, which is such a beautiful thing to say. With that out of the way, let's begin. So there's a research before we begin the discussions on the current happenings. There's a research which has come out which says people who buy flowers are usually happier. There's a percentage that they've allotted to it. People who buy flowers regularly over a period of year, they are usually more happy than people who don't. Now, can you see the problem with that kind of study? Can you see what's the problem with that study? People who buy flowers are happier than people who don't. Now, there's an instant causation correlation problem here. Uh, if a person is being able to buy flowers, that means that the person has some sort of disposable income. The person has a lot of money, and then some money left over to buy flowers. Then that person also presumably lives in a place which requires or which can use that kind of decoration. And thirdly, that person is probably in a relationship, because that's when you make these purchases. Right? So, as Mr. Patil correctly says, happy people will buy flowers, right? It's the other way around. Exactly. So, happy people are more likely to buy flowers instead of people becoming happy because of flowers, right? So, this kind of causation correlation problem is what we see in all business discussions as well. So, he's married in a relationship. You're right, Mr. Patil. Yeah. So, that person has more money, that person has a place to decorate, and that person has a relationship or a marriage to speak of, right? All of these things indicate that he's in a much better position than somebody who's basically fighting to make ends meet, right? And that person would easily or obviously not be able to buy flowers. So, causation correlation, which is a huge problem in business discussions as well. So, whenever you're talking business to a lot of very qualified people, they're often mistaking causation and correlation. And Mr. Patil says, sounds like a post which my wife will forward me today. Nice, nice. So, with that out of the way, let's begin. US company General Mills craves stake in Balaji Wafers too. So, Balaji Wafers is a snacking company. We've discussed it. And they were basically looking at a 40,000 crore valuation for a 10% stake sale. Now, the 10% stake sale is happening, and while PepsiCo and somebody else, right? So, there was PepsiCo and ITC, they were looking at buying. General Mills has also entered the fray. General Mills runs a very niche Indian business runs with a Pillsbury brand, right? So it's not something, it doesn't have much of a presence in India per se, but it's looking to buy into Balaji's 40,000 crore pie, right? Balaji had like a sales of 6,500 crores with a net of 1,000 crores. That's huge. 6,500 crores to net of, that's around 15%. 15% net margin is like huge. The beauty with Balaji's business is that it doesn't have an ad spend of 8 to 12% of its revenues, which is the standard for companies like Balaji. Instead, its ad spend or marketing spend is essentially 4 to 5, 4 to 6%. So it saves a lot of money, which it reinvests into the business. So that's huge, right? So Balaji is on fire. Now, why Balaji is not selling its stake as in a majority stake is because it's gotten a precedent set by Haldiram. So Haldiram also began its discussions by talking about a majority stake sale. When it shocked the market, and at the end of the day just sold like a very tiny minority stake for a $10 billion valuation. So Balaji has obviously learned the ropes, and it's going for a 7 to 10% stake sale with their business is considered. So PepsiCo, ITC, a few PE firms, and now General Mills. Very interesting play. Balaji really going on fire, which is nice. The founders are Virani families. Sounds like they've come straight out of, Kyuki Saas Bhi Kabhi Bahu Thi. Right? But it is what it is. Moving on. Tata Electronics iPhone shipments ring maximum gains from US. So Tata Electronics, erstwhile Wistron was Tata Electronics. So they basically, Tata acquired Wistron's plant revenue for uh, January 24, March 25. So US was the top market, followed by Europe, and followed by everything else, right? So US accounted for 37% of Tata Electronics FY25 revenues, followed by Europe. So uh, iPhone to US contributed more than 23,000 crore for the Indian assemblers' revenue in the last financial year. Ireland was the second largest. Ireland at 23% of 14,000 crores. So Ireland is Apple's base in Europe. So US and Europe, they basically make everything. Earlier, exports to Taiwan contributed 15%, while domestic market shipments were at 20% of the play. So this is very much expected. 2017 is when everything began. As far as the smartphone manufacturing play in India is considered, and since then it's only gone leaps and bounds. So this number shouldn't be surprising. What's surprising is that the tariff situation has not addressed the electronics play, right? So it's pretty much unscathed from everything that's happening. Moving on, China, on the other hand, has told ByteDance and Alibaba to cancel Nvidia's AI chip buys. So Nvidia, a company of geopolitical relevance, when do you know you've made it in life, right? When your company, when your product is relevant not just nationally but internationally. It's like a geopolitical relevance, right? So Nvidia is that company, of course. And China has asked ByteDance and Alibaba to cancel Nvidia chip buys because it wants its AI play to be a domestic affair, which is so huge. Which is so huge, right? So China says, and I quote, I mean, an analyst is saying, China clearly prefers to develop AI on a domestic tech stack. Better to bite the bullet now than to rely on US tech that can be restricted on a whim. That's what China says. Now that signals China's strength, right? Technology strength. It's not just hardware, it's not just manufacturing, but it's also software. DeepSeek really kicked everybody's ass, right? So, and then of course, it's not alone. So DeepSeek is not alone. So whatever China is doing is just extraordinary. Unfortunately, India's semiconductor mission came quite late, right? We were very late to the party, but we've begun. So let's see what happens there. In addition to India's semiconductor mission, which is happening its second calling, ISM 2.0, India also has an AI mission, India AI mission, which is also beginning. Although its budget is not that great, and whatever India is trying to do from the supply side is not getting much traction on the demand side, because demand side is overcrowded, or let's say washed away by people from the West, right? OpenAI, Google, and everybody else. So that's a bit of a problem. Speaking of India, Mr. Modi has had his birthday yesterday, the Prime Minister of India, of course, and he got a lot of wishes from everybody, all parts of the world. Well, that's not important. What's important is that Mr. Modi has a career, storied career, of a 3-time CM and 3-time PM, right? 3-time CM and 3-time PM. Now that career essentially is pretty much unparalleled, right? So he might just be the most successful politician India has ever had, and most successful politician perhaps that the world has ever had. If you call democracies, if you're only counting democracies, you can't count Russia unfortunately as a democracy because it's slightly problematic. Recent news came out where Russia's prime, I mean Mr. Putin's prime political opponent Navalny, who was in prison, and he died, right? So people were like, he died in prison, no false play detected, but it's now come out that he was poisoned, right? 47-year-old guy poisoned. So that we thankfully don't have in India. If you take out Russia and China, China is obviously not a democracy. He is perhaps the longest serving political figure in the world, which is just extraordinary, and at that scale, right? So a lot of policy continuity has also helped India with semiconductor and manufacturing and so on. So if you look at electronics manufacturing, smartphone manufacturing, that was 2017, right? Semiconductor mission came out in 2020, 21, I guess, or maybe I'm missing the date, but around that time. Uh, if if you looked at the previous, or let's say other side of intellect, if not making this political, people like Mr. Raghuram Rajan, uh, they opposed the semiconductor mission. They opposed making plants and relying on manufacturing or accelerating the push on manufacturing, which sort of tells you that Mr. Modi's rise has been a pretty good affair for the country, right? Again, nothing political here, just looking at it from a business numbers perspective. Speaking of numbers, AI rush prompts more investors to increase focus. So there are a lot of AI VC firms which are propping up. Sense AI, Together Fund, Mr. Girish Mathruboothum's fund, Sense AI, then there's Visor, Boundless Ventures, Uplekha, and so on and so forth. These funds are moving away from the SaaS model to AI model. So a lot of these funds were SaaS funds, right? Like Together was especially a SaaS fund because Girish Mathrubootham sir ran Freshworks, so SaaS was his specialty. But now moving away from that, they've come to Gen AI, and I'm just hoping for some of this money to fall on me, right? Well-sized funds, small funds, $25 million, Sense AI, 25, Visor, $150 million for Together, and so on. Mr. Vijay Shekhar Sharma and some other Harsh Jain, Mr. Harsh Jain from Dream 11, they've also pulled in some money to become LPs of an AI fund. So let's see what happens there. Speaking of Mr. Harsh Jain, right? RMG, that I'll call it RMB because that's what it was. It wasn't gaming, it was betting. So real money betting startups have started to hit payment aggregators. Now, viewers of Thinkers Frequency would remember when this particular play was getting on, right? Payment aggregators were positioning that it's not gonna hurt the companies, them. Why? Because we are pretty robust as a business and so on. But the thing is, that was only a positioning, right? That was only a pitch because a lot of these companies are looking at going IPO, right? So they do not want to paint a somber picture, but real money betting has shaved off like 30,000 up to 30,000 crores in monthly transactions from these payment aggregators, and these people used to be paying like 3% on credit card purchases and somewhere around that on UPI. So payment aggregators have started getting hit. The thing, they were claiming to be bulletproof, but they were not. And we saw that coming, right? So if you remember that episode, I don't know when we talked about this, maybe 20 days ago, we said that these people are trying to project themselves as bulletproof, but it's gonna hurt, which is exactly what is happening. So moving on, speaking of money, Grow is shifting focus from away from broking to wealth management and lending. Grow is going public, and broking is the mainstay of Grow, 96%. Now it's down to 93%. They're saying that we want to decrease our dependence on broking as a business, and we want to go into wealth management and lending. Now, why is Grow saying that? Can you guess why? Is Grow wanting to deleverage its position from broking? Anybody? Any guesses on why Grow is essentially looking at hedging away from broking as a business? Nobody? Or are you still waiting for me to actually reach there? There's a delay, right? Yeah, you've heard the question, so I'll give you a second. The reason is that broking is not a bulletproof play as well. So as Mr. Kamath always says, that broking is highly seasonal. What he means by seasonal is that right now equities are hot, so broking is hot, right? When equities crash, broking, the revenues fall from the cliff, right? And let's say if Jane Street happened, when Jane Street happened, what did you see happening, right? Futures contracts, FNO, essentially went away. So all of these things hurt the broking business, and you don't want that kind of seasonality for a public company, right? So let's say, what if markets crash tomorrow? What is Grow gonna say about its business, right? Right now, it's a 4,500 crore business per year, right? Revenue wise. Let's say if the volumes fall by 20 to 30%, which is what Mr. Kamath keeps saying. He's like that topper, right, in our class. He said, "नहीं यार, ये सब खराब है, मैंने कुछ नहीं पढ़ा," and so on and so forth. So that's what his pitch has always been. That if what if the markets crash tomorrow? The business will just nosedive, and when it nosedives, you won't have any place else to go, which is the case with broking, with the Grow right now. 92% of all its revenues coming from broking. So that's why it's diversifying. It's trying to diversify. Let's see what happens as its diversification efforts, how they pan out. Let's see. Operating revenue, 1,000 crore a year ago. Gross operating revenue in the June quarter dropped 9.6% to 900 crores from 1,000 crores a year ago. So wealth management and lending, it's going to be the play. Moving on, GCCs may add 5% to IT revenues. We've talked a lot about how GCCs have taken the shine off IT shoes. They've been very detrimental to Indian IT in general, because these companies used to be clients of Indian IT, and then they ended up setting up GCCs. What can Indian IT do in that regard? So Indian IT, which is a $280 billion industry, they've been trying everything to change their ways, right? They changed way of doing business. So the first thing that they tried to do was, from the RFP, they started going with the live renewals, right? That was one way of sustaining, or let's say continuing business, or offering better deals and so on. Then that was number one. Number two was essentially looking away from the concentrated markets. Number three, they recently announced their intent to actually invest in semiconductor and chip manufacturing, right? Electronics manufacturing. Number three. And number four was essentially serving GCCs themselves, right? So GCCs can also be clients of Indian IT by them offering some sort of onboarding support and so on and so forth. So they become customers of IT. Now that is mostly a build, operate, transfer model. So if you are setting up your GCC, we'll build it, operate it for you, and then transfer it to you, so that there is less of a friction when it comes to operating the play, right? That's what these people have been trying to do. And now GCCs are looking at adding like 5% to Indian IT's revenue. As we've said for a very long time now, Indian IT is looking at an existential threat, and it's not tariffs. It's definitely not tariffs, and it's AI, and it's every technological revolution. Like, forces are combining, and it's creating a perfect storm for Indian IT to totally change. It's already decoupled itself from hiring. It's not that employer anymore, but it's not going to be that business anymore either. Which is actually a good news if you're thinking about the market, that these people didn't innovate. They just kept doing the same work for 40 years. But it's very bad news for India, because they, they actually hire a lot of people. Mr. Tiwari writes, I know First Source does this build and shift for MNCs. I know First Source does this build and shift for MNCs. Okay, First Source is the name of the company. Well, I'm not aware of that. Moving on. There's an interview of Jamshed Godrej. He's talking about the Godrej Industries plan of building itself or reinventing itself. So Godrej, the steel player, Almiras and everything. And there's a lot of small businesses that Godrej has. Godrej says that we don't want to list, right? We would rather be independent companies. We'll keep ourselves uh, streamlined, and we'll also are looking at real estate very seriously. So Godrej has been looking at real estate very seriously, and he says uh, the only part which was relevant was that Indian cities need to be more effective uh, when it comes to managing or giving people the quality of life. So he says, like a typical aristocrat, like a blue blood, when you go to France, they also did a lot of redevelopment for like we are doing with Dharavi. They also did a lot of redevelopment in France, but that kind of play is gonna take 50 years in the country. Now, what does that say? Quote unquote, it'll take 50 years for India to reach that place. Does that sound like a positive thing for you? Or does that sound something that a science should be saying? Like one of the leading business houses of the country. Does that sound something like he should be saying about India? Even if it's true, right? Even if if had shades of true, but like we don't know what's gonna happen to in 50 years, right? So it's his opinion that it's gonna take 50 years for India to actually have like livable cities, right? But does that is that becoming from a person like Mr. Jamshed Godrej? I don't think so. I don't think so. I think it's a very poor projection. Uh, you want to say that India is a shithole, so you're talking about they are realistic, not positive for sure. It's not realism as well, Mr. Tiwari. So I beg to differ. It's not realism when you say that it's going to take 50 years for the country. That is your opinion, and that is actually a pessimistic opinion, right? That depends. Did it take 50 years for Singapore to transform? Right? It didn't, because there was Mr. Lee Kuan Yew, and he did everything he could, and he changed the course of the country in a relatively shorter period of time, right? And Singapore, though a very small city as compared to India, which is huge, it was a smaller problem to solve. It was a legitimate problem, right? But he could do it. So if he would have also began with the mindset that it's going to take like 50 years for it to solve, then it's going to take 100 years, because nobody knows what happens in 50 years. So he's not realistic. He's actually negative, which is sad, right? Especially when he's creating real estate, he's creating townships, he's creating cities himself, right? It's just so weird. Anyway, moving on. Some political discussions which we best not discuss. Some stubble burning beginning to become news, right? SC suggests arrest to curb stubble burning. Supreme Court is at it. Okay, so upcoming IPOs on Dalal Street add up to 1.5 trillion in market cap within a decade, says Jeffries. Mr. Manju Madhabal, talk a bit about listing of Urban Company yesterday. It rose 70% and settled with 61%. Mr. Manju Madhabal. So we've talked a lot about Urban Companies listing, even before it had listed. So I had written a very viral article like a year and a half ago about why Urban Company is perhaps one of the best startups to have come out of the Indian startup ecosystem. And then when it was listing, I had praised Urban Company, saying that they had left a lot of money on the table. They could have listed higher. They could have gone for a valuation of $2.5 billion, but they didn't. They settled at 1.7 billion, which was actually pretty interesting, because the company raised in 2021 at a valuation of 2.1 billion. So they actually went down from their valuation. It was a down round when it came to public, which meant that they respected real estate retail investors so much that they actually left some money on the table. They didn't try to juice or squeeze the real estate or retail investors like, let's say, Lenskart, which was aiming for a $10 billion valuation, which was a loot, right? So it was very beautiful on Urban Company's part to actually do that. And when they had like a 60% pop, 60% pop means that they are now what? Some $2.6 billion company, 2.5 to $2.6 billion company. Now, this is actually not a bad range for the company. Now, it might seem overvalued to some, but it's not, because what you've got to realize about Urban Clap is that there is no peer of Urban Clap nowhere, not in India, not in US, not in China, not anywhere. There is no direct comparator of Urban Company. I'm sorry. So there's nobody who does that, and urban companies pitch to the world, to the let's say the retail investors, could be that we are the services consumption proxy for India. So what kind of services is the new India purchasing? So let's say when you look at Eternal, Zomato, what do you look at it? No, Yes Madam is a very small player in a very small niche. It doesn't come close to the scale of Urban Clap at all. But when you talk about Zomato or Eternal, right? What do you see as the play? Somebody can say that they're a food delivery company. Somebody can say that they're a quick commerce company, but they're actually a consumption proxy for India, for the new India, right? People who are buying online are buying through Blinkit. People who are ordering food are ordering through Blinkit. Blinkit has a lot of other businesses. Blinkit has an events business, right? The whole event play, the festival play. So Blinkit is a consumption proxy for the country, right? Urban Clap could be the services proxy for the company. That whatever services Indians are consuming, we are the proxy for that. And suddenly, Urban Company will see its value getting tenfold, because tenfold is a figure of speech, but you get the idea, right? Because then people will have different ideas of Urban Clap. Right now, everybody wants to club Urban Clap with a services company. But first of all, they're not. They're a platform. Even though they are heavily services dependent, they are a platform. And then they also have products which are selling. And for selling those products, they have like a 50,000 feet on street, right? Sales force of 50,000 people, like literally people. Every company which is a D2C company right now, they have to depend on what? Amazon, Flipkart and all of these players, even quick commerce players. Urban Company is the only company which has its own distribution channel, a meaningful distribution channel. And if it can train those people to actually pitch it to customers and so on, you will see the company really skyrocketing. Now, having said that, this show is not about stock tips. So I'm not asking you to buy Urban Clap stock right now, right? And I'll not recommend that, because generally what happens with IPO is that when an IPO is so heavily subscribed, and Urban Company was like 100x subscription, so there comes a pop, right? A 60% pop. Then the value slightly drops off, the pop subsides, and then when the stock stabilizes, that's a time, if you're talking about a stock kind of a thing. But great company, I love those people. They've been our clients. So my first company, Testament, served Urban Clap a lot. We worked a lot with Urban Clap, and we're so happy that they're happy. Moving on, that was a big digression. Didn't intend to go in that direction, but okay. Upcoming IPOs on Dalal Street add up to $1.5 trillion market cap within a decade, says Jeffries. The IPOs, the secondary markets, they are really, so they're talking about the unlisted market and the potential in the unlisted economy. And they say that they're going to add like $1.5 trillion for the economy in a decade. Now, here's an interesting way to calculate. This sounds a lot, right? The $1.5 trillion in a decade. What is India's GDP right now? Okay, it's $4.2 trillion. What is it gonna be in the next 10 years? What is India's GDP going to be in the next 10 years? Right? It's gonna be $8 trillion. Assuming we have like a 7% growth rate every year. So 7% over 10 years means you double, right? So it's gonna be an $8.5 trillion economy. Okay? What is the total market cap of the entire country right now? Now that could be calculated by the Buffett indicator. Buffett ratio is 1.33 right now. 1.33 means the market cap of all listed companies in India divided by India's GDP is 1.33. Okay. So right now, total market cap of Indian companies is 5.2 trillion dollars. Okay, 5.2 trillion dollars. Now they say upcoming IPOs on Dalal Street may add up 1.5 trillion dollars to the market cap in a decade. So if you're looking at a decade, you're looking at an Indian economy of the size of 8 trillion and these IPOs adding 1.5 trillion. That is it. Does that sound okay? No, no, it does not. Right? They are underestimating. So these things are very easy to calculate. I don't know why these people and how these people are paid so much. And my very important question is like, how do I get this money? Right? How do I get this money? Anyway, ILFS to exit Roadster Invit in a debt cleanup plan. ILFS was the real estate financing play. Now infrastructure conglomerate. They went bankrupt. They actually had a lot of debt, 90,000 crore debt. They failed to pay. Then everything went fire, and now went in fire, and now they are exiting a Roadster Invit for 4,500 crores in a bid to pay debt. Moving on. NCLT has deferred Vedanta's demerger hearing to October 8. Some trouble for the Vedanta because Vedanta really needs that demerger to happen in order to pay its debt, right? So Vedanta is a heavily indebted group and it needs that debt cleanup, and a way it figured out to clean its debt was to demerge its companies and list them independently and keep a stake and then use those IPO proceeds to actually refinance the old debt, right? So that's going on, but they had like an NCLT showdown, so getting delayed, that's a bit of a problem. Moving on. Okay, grows IPO is gonna be huge, $7 to $9 billion valuation. That's pretty big, right? GST reform set to inject 2 lakh crore into economy, says Madam Sitaraman. Madam Sitaraman is saying that GST reforms are going to add 2 lakh. 2 lakh crore is essentially 24 to 25 billion dollars. $25 billion is going to get added to Indian economy because of GST reforms, and because GST has been rationalized to this extent, people have a lot of cash in hand. So she says that people are going to have a lot of cash in hand, and that has second order and third order effects. So when people have the cash in hand at the right time, they end up buying things, and when they end up buying things, people who are actually selling those things prosper. When they prosper, they end up hiring people. When they hire, more people have cash in hand, right? Because they have a job, and then they buy. So it leads to an upward spiral. In 2018, Mr. Subramanian Swamy had written a book called Reset, where he said Indian economy needs a reset because there's a consumption crisis, due to which there's a private capex crisis, due to which there's a consumption crisis, and it's a downward spiral, and he called it a tailspin. So Madam Nirmala Sitharaman says the opposite of tailspin is going to happen because it's going to be an upward spiral. Now, it's what I want. It's what everybody wants. It's what every right-thinking Indian wants. That everything that the government has tried to do, like they've taken a hit of 48,000 crores from the government income, right? And they desperately want that whatever happens, people just should buy. They should buy cars, they should buy bikes, they should buy everything, right? Everything under the sun, people need to buy. The only concern is, what if people just save this money, right? Now that is like a tail risk, that whatever the government is trying to do here, right, it doesn't pan out because people end up saving money, right? Now they won't have the incentive of saving money, right? Because FDs won't be paying much. Interest rates have come down. There's been a rate reduction, and that has translated to lower uh, interest rates, lower borrowing rates, and also lower deposit rates. What happens with lower deposit rates? People are not incentivized to actually deposit money in fixed deposits, or let's say current deposits, or whatever, right? So people don't deposit money because it's just lying around. It's not getting any interest, right? Like that green. It's not that green. And now that bank CRR has been decreased from 4% to 3%, that means the dependency on these deposits has come down, right? So they'll be doing a lot of lending, and they don't care even if deposits go down, because net interest margins are going to be nice. Now the point is, what if people don't buy, right? That's going to be a bit of a hassle. But Madam Sitaraman says that that's not going to be the case, because we have a lot of leading indicators like logistics, like transportation, like toll readings, like stock supplies, and so on and so forth. People are looking to buy. And she says if people buy, it's going to be awesome. And what they've done is they've not just decreased the GST for consumers, the business, average consumers, average accounts. They've also cut GST for businesses. So GST cut on green power parts may save 3,000 crore in power purchases. So, when it comes to green power parts, right, that is mostly a business business purchase, but that also has a second order effect, so that people who are looking at setting up solar installations at home, that becomes cheaper. So it's across the board, everything goes cheaper. When everything goes cheaper, people should be buying more. But Indians, what if they don't buy? That's a very good question. So mechanism is being set up for sharing growth trends with ministries. So they're talking about ministries to have a very different view on, let's say, service industry, agri industry, manufacturing industry, and so on and so forth. They want to, have a very macro but bifurcated view of every segment of the economy. And they're also talking to companies on making sure that they actually translate the GST effect to people. So what happens is, Indians being Indians, when GST goes down, the companies, what they do is, they, instead of passing it on to the customer, they pocket that and have nice and fat margins, right? So the government is making sure that that doesn't happen. And it's set up like vigilant units to make sure that each company and each industry is following the GST rationalization norms and passing the benefits on to the consumers, right? Missiles and drones amongst 18 defense imports exempted. So no import duties on missiles, drones. Drones are everything. We've talked a lot about drones. Drones are like nuclear technology without a limiting factor, right? When you've made a nuclear bomb, you don't need to make a 30% better nuclear bomb, or a 50% or 100% better nuclear bomb. So nuclear bombs, nuclear tech has like an upper limit. It has a ceiling to how far it can go. Limiting factor, right? Drones have no limiting factors. So the more drones you make, the better drones you make. You can just keep making better drones, keep making more and more effective, more and more efficient, more and more useful drones. And it just drones are everything, and India needs to. We've talked a lot about how Indian defense strategy could move away from fighter jets towards drones, but that's not happening, unfortunately, right now. I think the government should consider it. I hope they're listening. I hope Mr. Rajnath Singh is listening to Thinkers Frequency. Anyway, speaking of jokes, there is a joke by WTO, the World Trade Organization. They say AI can boost global trade by nearly 37% by 2040. So they've given a 15-year projection, and to sound credible. How can you sound credible? There's a way to sound credible. When you're winging it, when you're full of shit, right? What do you do to sound credible? You speak in obscure numbers. So if they would have said like 40%, right? That would have been like, oh, that doesn't sound deep. That doesn't sound very scientific. So 37%, that's what you say. So you sound deep by saying 37%. AI can boost global trade by nearly 37%. So in order to sound intellectual, these people have said that they're likely scenarios. The number one scenario is when AI actually bridges the divide between haves and have-nots as far as countries are considered, and that's the positive scenario. Negative scenario is that it doesn't happen and it only increases divide. In that case, the technologies and IT technologies will be easy to trade, but products will be seen. So basically, a hogwash, 2040 projections. The only interesting part is that these people are getting paid for this nonsense. Anyway, uh, India UAE to review trade progress pact during Mr. Goel's visit. That's nice. We've talked a lot about that. Geothermal projects may get funding after assessment. So the government is looking at geothermal projects a lot. Of course, the government had a plan to actually meet 50% of its energy needs by renewables, right? Uh, by 2030. They've already met that goal by 2025. So they're actually going all guns blazing on renewables. They're basically following China's lead, which by 2030 is gonna make as much solar power, just solar power, which will be equal or more than US entire energy consumption for a year. So China, it's just, you know, moving on. CAG to launch portal in November to boost data-driven audit process. Okay, sure. Uh, JSW firing on all cylinders. We've talked a lot about JSW. JSW steel unit will increase stake in MRES NSW to 83%. That's fine. JSW also has plans on making cars. That's huge. JSW got into paints, the Dulux brand. Dulux. Novo, they bought it. Then JSW is also looking at buying ThyssenKrupp, which is extraordinary. Then JSW Neo is also looking at some, so JSW is on steroids. I wonder how, and that's great because JSW was very anti the current dispensation, right? But they've grown leaps and bounds. Mr. Archit asks, why in our country can't made game like Last of Us, RDR? They're no company as well as I think they should make games. Okay, so it's talking about gaming as an industry. Mr. Archit has a question. Then why don't we make games? That's a fair question. And I have news for you. So you've not been watching Thinkers Frequency a lot because we've talked a lot about this. Gaming as an industry is bigger than film industry and music industry combined. Much bigger. It's much bigger than the film industry. And it hires a lot of people and it's a high tech industry. So what gaming does leads to a lot of second order effects. So you make games and those skills are transferable to other technologies as well, right? Let's say medicine and so on and so forth. That actually is true. So those simulations actually help other industries. Now, there are companies in India which are looking at gaming as an avenue. So they are actually, Mr. Ashwin, the writer of Immortals of Maluha. Who was the writer of Immortals of Maluha? Mr. Amish Tripathi. So Mr. Amish Tripathi is actually looking at a gaming company where he uses games based on Indian mythology as a cultural export. So a lot of action has started to happen, but you and I are on the same page because India needs more gaming. And when real money betting apps closed, a lot of people thought that these betting apps will become gaming apps, right? And I said that's not going to happen because that skill is categorically different from gaming. Gaming, when you're developing gaming, it's a creative endeavor. It's a technology, high-tech endeavor. Betting is mostly money spinning, right? So we can only hope that some of those companies invest a lot in real actual games like Rovio, right, Niantic and so on and so forth. Let's see what happens. Moving on. NHAI tightens contracts rules to cut cost delays, bring in sector qualification norms, greater financial transparency. So this is in reference. So when you're looking at history, it always helps to look at history as a process instead of museum pieces, right? A showcase of museum pieces. You should never look at history in silos, right? Or as pieces in a museum. It always helps to look at it in a process. So NHAI was doing very well. Uh, Road construction, great. Speed, great. Then these companies started cartelizing, as per Mr. Nitin Gadkari. Mr. Nitin Gadkari responded to that cartelization by actually making it easier for smaller companies to bid for NHAI's contracts. Now, smaller companies started bidding for NHAI contracts and they bid cheaper, right? So it seemed like, oh, we're going to save a lot of money. But then they did a lot of shitty work. Now, all that shitty work led to lower road quality, and we had a new problem that whatever roads we are making, they are shit, right? So then NHAI actually had to claw back on their anti-cartelization stand and tighten contract rules, right? And now it's gonna be a bit more expensive for the country, but hopefully quality won't be a problem, costs and delays won't be a problem. Moving on. VC funds are going solo. So when you're in a VC firm, a big VC firm, there's a ceiling to how high you can go. Now, what VCs are doing is that they're branching out, setting up their own VC firms, smaller VC firms. That is also happening with lawyers, rising stars of legal companies. They're setting up their own practice instead of being with the top four, right? Big four of legal. This is Sam, Cam, and then there's Khetan, and then there's Trilegal, right? Four big law companies. So these people are venturing out, VCs and legal companies, which is no surprise. In a growing economy, investors, what do you say? Diversify, right? Diversification, or let's say fragmentation, is always good news for companies who are dealing in stuff like investing, or let's say legal affairs. When it becomes, VC business itself is not a scalable business. You cannot scale a VC firm too much. You can have assets under management huge, sure, but the team has to be small, right? And what that means is there's very, very few people at the top, and those people can set up their own shops, and it could be good for the country also, because they will have fresh perspectives. They will have learned from their previous companies, and they might be looking at other sorts of companies which these tier 1 companies don't look at, right? So moving on. Sony and Tata Play are in a lawsuit. We've discussed about DTH trouble. So we've talked about DTH, direct to home cable, basically TV. That industry is in a lot of stress. And what happens when an industry goes into stress, right? Lawsuits happen. Because when the pie shrinks, it becomes a very ugly game, right? Everybody's fighting, everybody's cursing each other. Basically, everybody's trying to cut corners, right? And when they're trying to cut corners, they eventually fight. That's what's happening with Sony and Tata Play. Sony alleges that, Tata has unfavorably treated their channels, and somebody writes a comment. Mr. Kumar says, Nishant talked about Amish Tripathi game startup in great detail in the initial Thinkers Frequency episode. The comparison between game and movie business was an eye-opener for me. Well, thank you, Mr. Kumar. It is actually a big deal, right? That gaming has such a cultural influence, such an economic influence, but less cultural influence. So movies arguably have more cultural influence than games, but as a business, not so much, right? Because gaming is money. Gaming is real money. Moving on. So Sony is basically fighting with Tata, and they have, we've talked a lot about this. So I'll just tell you exactly what's going on. Annual audit of their subscriber management system and conditional access system through impaneled auditors, right? One second. Yeah. So essentially, Sony channels were getting some sort of brick wall treatment by Tata Play, and they said this is unfair. We need to audit their subscriber bases and how our channels are being displayed. And that's not just Sony and Tata which is going on. The same case also went on with Z. So it's just a dumpster fire right now. DTH, why is it a dumpster fire? In 2015, DTH had 150 million subscribers. In 2020, they had 100 million subscribers, right? And by 2025, they had 100 million subscribers. And 2030, it's said that DTH will have just 75 million subscribers. So in 15 years, that entire industry will shrink to half, which is leading to a lot of problems as far as this industry is considered. Moving on, refurbished mobile sellers are also looking at discount game. Cashify, these people have never been able to make money, by the way. All these refurbished electronics players like Cashify, they've never made money, never. But they are trying to sell more. So they say that we want to have like a 10% pie of the new sales. So we're gonna be a discount player as well. We're gonna do that. Let's see how that pans out. Their gain will be new people's loss. Right? So everybody would want that these people should not succeed, because the new manufacturers are worried that their stock is not getting cleared. Speaking of worries, Goa, essentially Goa's real estate is in a free fall. It's fallen 20% this year and 30% over a larger period. So it had really grown up after COVID, because everybody thought that investing in a Goa villa or a hotel would be a good idea. I strictly advised, so my people, my near and dear ones, they were going to set up their own Airbnb in Goa, and I talked them out of it. I said that this thing is going to hurt you a lot, which is what happened now. So I helped them save money, right? Real estate is now getting corrected in Goa. It's going to get cheaper a little, and then probably there'll be a time when it makes sense to buy something there. But at that time, it would have been a very foolish purchase. And while I didn't make any money, they didn't lose money. So it was fine. Right? Moving on. Housing market seeing a correction. Tech GCC, speaking of real estate, GCC set to drive office space leasing this year. We've talked a lot about this. GCCs are going from 1,500 to what? How many GCCs are there right now? There are 1,100, 1,500 GCCs, right? Now they're going to be some 4,000 GCCs in times to come. And they want to actually lease 100 million square feet. Since they've leased 100 million square feet since 2021. I just want to know the number. I'm missing that number. Does anybody remember the number of GCCs that are set up in India and that are going to be set up in times to come? Because we've talked a lot about this. I'm somehow forgetting. But anyway, that number and the number of people that they are going to hire is skyrocketing, and they're actually buying a lot of real estate, and they're setting a lot of offices. So 50% of all offices that are being set up are toward about 50, like 40%, 40 to 50%, in that range. That's all going towards GCC. So we should be very thankful for whatever is happening as far as the GCC space considered, but it's obviously not good news for IT, right? Leasing share 40% in 2021, 2026 greater than 40%. Sectoral mix, technology 37%, BFSI 27%, and so on. So GCC is really going all guns blazing on real estate. Moving on, it has happened on Wednesday. We told you that Fed was going to cut rates. That was on cards. It has happened. 25 BPS. 25 BPS is 0.25%. So 0.25%. Two more rate cuts to come in 2025. So Fed is cutting rates. That means some good action is going to happen at US stock markets. Lending is going to be cheap. US stock markets will benefit. If US stock markets benefit, what's going to mean for Indian stock market? Ideally, the simplistic way of thinking would be that if another market becomes more attractive, investors will pull out of Indian market and start putting money in US market. But FPIs have already pulled out enough, so they don't have that kind of sway on Indian markets. So it's hard to predict how it's going to affect Indian markets. I'm just thinking. There's a lot of companies in India which are dependent on US business, so it should be good news for IT, right? What else? That could be a very good analysis, right? That could be a very good way to look into the future. How is this particular rate cut going to affect us? Uh, these Dalal Street can get on with trading now. Nifty Sensex rise 0.4%, VIX at all-time lows. India likely to get more FPI flows. Now these people are saying India is to get more FPI flows, but that is at least right. Absolutely, in the short term, it could not happen. But yeah, long term, mid term, we are all hoping that India gets more FPIs, right? We've talked a lot about India has been trying to drum up the FPIs, right? They made it easier for FPIs to come in India. There's a single window. The earlier limit of 80 crore has come down to 25 crore for a particular investor. They've set up the gift city in a way where it's attracting domestic companies to set up in gift city so that they can invest in Indian equities or Indian markets through as FPIs. So a lot of stuff India is trying to do to attract FPIs. Let's see how all that pans out, right? SMBC is buying 4.2% more in Yes Bank. We've talked a lot about this. Sumitomo Mitsui Banking Corporation, they're taking over Yes Bank, and Yes Bank was rescued by SBI. Yes Bank is Mr. Rana Kapoor promoted bank, used to be, but then a lot of things happened and he is now in custody, man. It's very, very dark for him. But Yes Bank has been rescued, so all the lenders which had put in money in Yes Bank, they're diluting their stock, and they're also going to get favorable tax treatment because that was a part of the deal, right? That you're putting money in this shit bank, so you'll get some tax rebate when the money comes out. So they are all happy. Moving on. Bank NIMs to bottom out in Q2 as benefits of rate cut kicks in. So viewers of Thinkers Frequency would remember, I talked a lot about NIMs. We've been talking a lot about NIMs since first few episodes. It's finally bottoming out in Q2 as I said, exactly as I said, right? So our prediction as far as the net interest margin were considered, they've come true. It's going to bottom out in Q2, and from Q3 FY26 it's gonna pick up. So good time for banking, right? Good time for banking stocks and so on and so forth. But there's a relief ahead. Now, why the net interest margins are gonna pick up? CRR is down 4% to 3%. Banks have a lot of liquidity, surplus liquidity. They can use that liquidity to lend more. As they lend more and they're less dependent on deposits, net interest margins pick up, right? Banking becomes green again. Make banking great again, right? Mubuga, whatever that means. I was just trying to go with an MAGA thing for banking. Moving on. Insurers told to pass on the benefits of GST reduction by the government. Well, of course, insurance has gotten exemption of GST for people buying individual life insurance and stuff. No GST. That means that the government is saying that they want to have 100% coverage by 2047 of insurance. So they say that's the goal, to have Vikasit Bharat. Everybody needs to be insured, right? If everybody is insured, nobody would be bankrupted as soon as they get an illness or something or an accident. So that goal, that's why the GST is off. We've talked a lot about how industry actually resisted that. They said, sir, no GST here, but GST here, inverted duties and all of that. We've discussed a lot of that and I won't repeat myself unless somebody wants to know. The inverted duty play, right? Moving on. PayU has taken up its stake in MindGate to 70%, right? That's okay. Drive synergies. AR glasses, privacy risks in view on big compact. AR glasses are coming back. Meta has tied up with, of course, Ray-Ban, the Luxor Exotica. Essilor Luxottica. That's the company which makes glasses. It's the biggest competitor of Lenskart across the globe, right? It's a $100 billion euro company. So they make glasses, and with this particular thing, what happens is that you can scan anything in the surroundings and AI starts telling you exactly what's happening. So if you can look at a person, AI will actually search for them and they'll be able to tell you who that is. So that is obviously a privacy risk. But people are talking about regulations. But what have I told you about privacy? Does anybody remember what did I tell you about privacy? Right? What privacy? Do you remember? That's a very interesting and very important thing which most people don't realize. That privacy, I'm just waiting for somebody to write it. One second. Miss Ridhima Agarwal says, privacy is a myth. Mr. Patil says, privacy is a myth. Yes. Privacy is an absolute myth. Whoever is talking about privacy is basically a lawyer who's a privacy lawyer because they want to make money, right? So they look at this. So casual wearers may not be strictly bound by Digital Personal Data Protection Act, but partner at Trailblazer advocate. So wherever you hear anything about privacy, there's going to be a lawyer at play, because privacy is not a real concern, or cannot be a real concern, because it's a myth. And I also told you about how to actually have privacy in your life. Do you remember that? What's the only way that you can actually have privacy in this world, in this time, in this day and age? Privacy from tech companies, privacy from the government, privacy from competition, privacy from everybody. What's the only way and the only realistic way where you can actually have privacy? I'll take another sip. That's very important too. It's very, very important. What is the only way to actually have real privacy in your life? Anybody wants to say? Some comments on LinkedIn. I missed out. Sorry. Very old comments. They've probably left by now. It's not JSW but JSPL that has plans to bid for TakeAS. JSPL is owned by Naveen Jindal. Yeah, I meant the Jindal Group. Mr. Sumukh Savanur. Miss Sudha R asks, how will the Fed rate impact gold prices? Gold prices. Gold should go up. Gold should go up. By not being interesting, Miss Ridhima Agrawal says, by not being interesting. The only way you can actually have privacy is by not being interesting. That is true. So, with that, and whoever is talking about privacy, just check if they're lawyers, and you'll find out, that they are lawyers indeed, right? That's with that we come to the end of the 116th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. I wish you a beautiful day. It's 9:14. We're going to punch in anytime soon. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. Take care and have a nice day. I'll have to thank individually Mr. Patil. Thank you so much. Mr. Tiwari, of course. Thank you. Mr. Manju Madhabal. Sorry. Mr. Manju Madhabal. Mr. Ashutosh Bhandekar. Mr. Archit. Mr. Raju Kumar. Thank you so much for all the indexes. Now, very soon, we are going to be indexed to all episodes. All Thinker's Frequency episodes, right from episode 1, is going to be indexed by Mr. Raju Kumar. And we should all be thankful. And when that happens, Mr. Kumar, I'll have a gift for you. So that'll be, a gift to you. Miss Ridhima Agarwal. On LinkedIn, I need to thank Miss Sudha R, Mr. Sumukh Savanur. It was lovely talking. I learned a lot. Thank you so much. I hope it added value to you as well. I hope it was fun. See you tomorrow, hopefully. Bye-bye. Take care.